Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's February 7th. I'm Frank Curzio, it's the Wall Street Unplugged podcast, so I break down headlines and tell you what's really moving these markets. You know, I had a crazy weekend. On Saturday, I drove 3 hours to Tampa, take my oldest daughter to go see her favorite performer in the world, which is Drake. Massive following, massive. I don't know if you're older and you don't know too much about Drake, massive. So the concert was on Sunday, 8 p.m. We drove there Saturday, so we had all day Sunday, and I said, you know what, let me be a great dad and plan something. So I decided to plan a trip to Busch Gardens, which is not too far away. And I planned it well, thought out, analytics, everything. So I looked at the weather. It was going to rain until about 11 o'clock. I said, look, if we go early, there's not going to be people in the park. We can go on all the rides because there wasn't any lightning. Bought fast passes because later on the park's going to be a little crowded. Bought the food pass, bought everything, and it worked to perfection. We got in there. It was empty. We got all the rides, got a little more crowded. We used a fast pass. We ate a couple times. It was absolutely perfect. So it was really great. And every ride, I mean, we hit a lot of the rides. Now, the planning, again, was perfect. And you guys know I'm analytical, so I just, plan the whole entire thing. But I forgot one important variable. That I'm older than shit now. And I'm 51 years old. I'm not saying if you're older than that. I'm saying for someone who's going to go to Busch Gardens like going to Disney World. It's not even like going to Universal. Universal has a couple of crazy rides. Busch Gardens has 10 roller coasters. They have insane rides. It's nuts. And I have to say, I try to be a tough guy, but after 6, I was done. And of course, my daughter's like, hey, let's go on one more, which means let's go on the rest of them. And as every dad knows, when your daughter asks, hey, just one more, you're going to say yes every single time? I'm like, I'm good. We're fine. She's like, are you okay? I said, I'm fine. And I went on every single one of them except for one. Because I had to tell her no. I was like, I was done. And I felt sick for like the next 5 hours. I was like, what am I thinking? Right? Like, hey, it's just going to be me. She's 15. Again, you get into that stage, right, where you're not. She's going to want to do these things with her friends going forward, right? She's like right at that. Even take her to the concert. I'm just thinking, man, she would be having an amazing time if she had friends here instead of her dad, and my young one still lets me play a couple of innings, which is cool. She's 13. But it was funny trying to keep up. And I felt sick, which is a nightmare. Busch Gardens is beautiful, by the way. They have animals everywhere. It's unbelievable. It's really, really cool. So, we got back to the hotel at 5, freshened up. 6, got to the concert at 7:30. And again, I'm starting to come out of it, feel a little better. So we got there at 7:30. Drake came on actually at 9:30. Now it says it's going to come on at 8, right? That's a concert. You usually say, okay, 8:30. He came in at 9:30. I go to a lot of concerts because they're so cheap to go over here and you see great people for so cheap compared to New York, when I'm living in Jacksonville now. And he came on 9:30, which was crazy. When he came on, I don't think I've ever seen someone command the stage. And he had dancers on there maybe for 10 minutes. He had J. Cole, which is another great rap artist. I'd never seen someone command the stage like that other than I would go back to like Michael Jackson. I'm not kidding. I mean, this crowd sold out insane. This is a new album. They knew every single song. I mean, this isn't like going to a Stones concert. It's not like going to see Elton John, Metallica, where they're playing their favorite hits and it's their farewell tour for like 9 years that they did the farewell tours for. You get to see them like 4 or 5 times at any venue, basically. This is a new album. They knew every single song. They were going absolutely crazy. And it wasn't a crazy audience. It's like it's Sunday night, mostly over 17. It's like 35-ish, 40. I mean, I was the old man in the room, obviously, but just the energy and the fact that everyone was just going crazy and his energy, I mean, it's unbelievable. This guy has such a cult. I mean, it's an amazing cult that I was thinking, I'm like, this guy has more power than Putin. Like, if he told his followers, hey, we're going to go to war with somebody, they would go to war and not ask any questions. That's how controlled the audience was. Again, someone goes to a lot of concerts. I see people go crazy. This was different. It's amazing. I don't know how it is at Taylor Swift or whatever. Again, you're getting a much younger audience, but this audience was just dialed in, and he was cool. He was like, everyone should be happy and this and that, and you leave the place, be nice and this and just really respectful, really, really cool. And the funny thing is when we walked in there, if you're looking at the merch, which is merchandise, that merch is now, the younger version of merchandise, there was, I think, 16,000, 17,000 sold out. If I had to guess, at least 12,000 bought merchandise. Their sweatshirts, Drake sweatshirts, were going for $240, and they literally had hundreds and hundreds. You couldn't see the ends of the lines on any place. I mean, it took you, they were moving pretty fast because they had like 25 people at these stands, working the stands. I've never seen anything like this with $240 for a sweatshirt that basically probably cost $15, $10 to make. And they were lined up and couldn't buy enough of them. That's how insane it was. I mean, it was unbelievable. We got home at 1 a.m. The good thing is he came on late, but he sang extra. He's like, this is one of the best crowds I've ever had. And I'm not just saying that 15 years. I mean, just the following, the energy. Again, I'm not the biggest Drake fan. I know a few songs that he didn't sing because he sings with other people that I like. But it was unbelievable. I mean, you felt the energy there, and going to a lot of concerts. That was really, really cool. The most important part is I really made my daughter's weekend. That's what it's all about. I don't know if I'll do Busch Gardens ever again. 1 or 2 roller coasters. Seriously, 10 roller coasters. And they are crazy, crazy, crazy roller coasters. They're not, they're pretty insane. And they beat me up. So I think my cutoff age was maybe a year or 2 ago for roller coasters, and still trying to get that fun time out with my daughters. But it was really cool. Had a great weekend. Sometimes you need to get away, enjoy life a little bit, and it was a lot of fun. Now, get to the markets. Powell, last week pushing rate cuts further back. China continues to crash. Yeah, Palantir, which reported really great results, stock surged. Its CEO, it's a little crazy, and I like him, believes the China-Taiwan conflict, that's inevitable. And this guy would know, since they handle defense contracts all the time and what's going on. Something that I said that I think is inevitable as well. With China, where they are and how that market's crashing and how we're cutting them out of AI, which is the future. I read a stat the other day saying 90% by next year. This is crazy. This can't be true. 90% of the content you see on the internet is going to be AI generated in 12 months. Holy shit. And everything that you see on the internet could easily be created through AI. I just don't think it's going to happen that fast, but holy shit. I want to talk about revolutionary. There it is. But that's why I believe China, you're cutting them out. NVIDIA's not allowed to sell their best chips to them. You're cutting it. What are they going to do when they're desperate? When their entire real estate market is just bankrupt. I mean, they're trying to have these initiatives, lower the bank reserves, and try to stimulate it. It's not working. They've been trying to do this for the past 12 months. Their latest round, stopping short selling and all this, it's not working. That's how terrible and horrible it is, to the point where I'm hearing from my sources that if you're looking at investors in China, they're investing in U.S. stocks. They're not touching China. That might contribute to what's going on with our market. Because it continues to go up, because you also have U.S. launching strikes in Iraq and Syria against terrorist groups. And that's starting to get ugly. New York Community Bank is still collapsing. It's $3 now. It's $3. It was 10 7 days ago. That should be a concern. I know it's a very small bank in the scheme of things. The top 4 are so much bigger than even the next 6. They did the research on this. I think there was only like 30 banks with over $100 billion in assets. And when their community hit that, there was more stringent rules on a regulatory front, and they had to provide for more loan losses and do their ratios, which is, this is a boys club. They don't let any small mid-cap banks get big enough and get into the top 4. You're not allowed to do that in this industry. The only industry you're not allowed to do that, which is crazy. And it crushed them. But is that going to lead to other community banks who have to be having trouble with interest rates this high? They rely on real estate market, relatively frozen here when it comes to mortgages. Yeah, the 10-year going higher, over 4%. Massive layoffs taking place, especially from the companies that are reporting the best numbers, which is big tech. Reporting great numbers and laying off employees, something I haven't seen with stocks at all-time highs. Usually don't see companies laying off because the stocks at all-time highs, it signals that we're going to see strong growth ahead. But all this stuff doesn't matter. S&P, again, approaching all-time highs, closing on 5,000 for the first time today. And it's led by Meta, Amazon, Microsoft, Google a little bit, which I thought was solid. Apple, Tesla, not so much. Let's see what happens with NVIDIA, which is the last of the Mag 7. They're going to report 2 weeks from now. It's 21st. And man, analysts are just going crazy. Goldman Sachs raised their target to 800, and now it's trading close to 700 NVIDIA. Morgan Stanley raised it to 750. Bank of America also raised it to 800. That's just a few. Those are the big names. And many folks in the financial media that I'm seeing, Josh Brown was, he's like, this is crazy. It just ran up too fast. It's nuts. And I missed the initial move on this. But for me, doing a whole segment on it saying, and this is 5 months ago, after I missed most of the move, but this is when it was below 500, saying that this stock, with the earnings that it put up, is actually cheaper than it was a year ago when the stock was trading at half the price. I mean, the earnings that they put up are earnings that I've never seen. No one has seen that kind of growth quarter over quarter in earnings. Outside of maybe a few companies when it came to COVID and Zoom and stuff like that. But no, I mean, just off the charts. But you're looking at NVIDIA saying, oh my God, I got to get rid of it if I own it, or it's crazy. I just looked at it and said, it's trading at a cheaper valuation than Microsoft and Apple. And everyone's telling you to buy those two stocks. Yet this one's growing 3x to 5x faster than Apple, 3x faster than Microsoft. In the biggest growth trend in the world, a growth trend in AI that really helped push the entire market higher. The entire market higher. This was like mid-2023, expecting to pull. This was the stock that was like, holy shit, that blew it out. And everyone's like, wow. But it's trading at 34 times forward earnings estimates right now, which is cheaper still than Apple and Microsoft. And still growing much, much faster than them. When I look at NVIDIA and you look under the hood, you say, okay, what do they have? And again, I missed it the first time around, the second time around. To me, just as a Mag 7 stock, this was the one to buy. This one had more upside than any of the other ones. And Meta probably outperformed NVIDIA over that time frame, which is fine. They're great. That's fine. But NVIDIA, I mean, they have the holy grail. And produces the best AI chip in the world. Nobody's even close second. AMD, they're trying to push higher, 50 times forward earnings. They have a bunch of shitty divisions, though, with PCs and all this other crap. But AI is like the pure play with the best chip. Lightyear's still ahead of everybody, which gives them incredible pricing power. And what's important when it comes to pricing power? What you're seeing, how Chipotle reported great earnings. You see another company, McDonald's. Notice how McDonald's came down and people were bitching because, all right, you just raised them too high. When you have pricing power, you're only going to have it to a certain level, and people are going to be like, F you, I'm not paying. Chipotle still has it. Lululemon still has it. NVIDIA produces the greatest chip in the world, and not only does it have pricing power, the richest companies in the world are dying for it and could spend billions on this because they generate tens of billions of free cash flow. Every year, in some cases, every quarter. So they're locking down this entire industry because they hold the most data, and that's where AI works the most. So you have these clients that just continue to pour billions into this, and that's the trend. And by the way, try not to ever sell a stock at a 52-week high. And you might catch it, but, it's... Again, you're not supposed to buy stocks at 52-week lows either, but unless there's something going on that you see insider buying or things or really, just this reaction of a forced sell-off or something like that, where people just run for the exits. I felt that was the case with Peloton, believe it or not. But man, NVIDIA is just well positioned right here. But for those of you invested in Apple or looking to buy Apple, I mean, easily you make the case Apple is a worse choice, much worse choice than NVIDIA, considering it's cheaper and growing much faster, and Apple is last. Of the Mag 7s, well, Mag 6, I wouldn't throw Tesla in there, in terms of getting into the AI revolution, which is crazy. I mean, maybe it's not so crazy because they usually sit back and wait for someone to do something, and then they're like, wow, we could do it better. This was something you shouldn't have sat back, because now they're just talking about it. They're going to be huge beneficiaries of AI. But now they're probably going to have to pay a lot more money for it. And now, what companies are you going to take over? I mean, you know how many companies, NVIDIA, Microsoft, and Google have taken over in AI over the past 3 years? Holy shit. Literally hundreds of companies. All the best companies. As soon as they come out with good tech, boom, we're taking them over. Microsoft, OpenAI, got in it very, very early. Interesting to see how this plays out for Apple. So we had Chipotle report. They were great. Roblox was awesome. One of our portfolios, which is cool. Yum Brands as well was good. Ford solid. Finally, following GM's footsteps and others cutting EV production because they make a shitload of money on gas vehicles. VF Corp was terrible. Paramount weak. Gilead weak. But for me, this earnings season, something that I talked about over the last 9 months, you're seeing it even further now where the disconnect between good names and bad ones. We're not seeing entire sectors in cloud or AI, big data analytics, software. You can even go out to defense companies. Like all the stocks within the sector or the entire market just going higher, going higher, going higher. That's not happening. You're seeing a clear disconnect between the good companies and the bad companies. And that's good. That's a stock picker's market when you see that. And you want further proof of that. The S&P 500 is up 5%, about to hit an all-time high, while the equal weight, which applies equal weight to all 500 stocks, is flat on the year. So unless you own Meta, unless you own, Google ran up into the quarter, then pulled back a little bit. Amazon's up, big. NVIDIA, the Microsofts, unless you own basically those four, better be in your portfolio for you to be outperforming. You might have got lucky with a Caterpillar or a couple of others here. But that's what you're seeing with the market. It's not like this breath where everything's going higher and that's great. You wouldn't see these massive layoffs. But you can't look at the S&P 500 as a market. And you can't look at it as a gauge of the entire market. You just can't, just like the economy. When people describe the economy, we have to say it's either good or bad. Why can't it be both? Jobs are strong. Wages are pretty strong. GDP's better than expected. You're seeing areas of the market do okay here. Leading indicators are down for what? 21 straight months? That's the ultimate leading indicator because when you see that, it 100% of the time, it's happens just before a recession. Yet people don't expect a recession. The housing market is kind of frozen. Credit card delinquencies are surging. Right? So there's areas that you could say are really good and areas that you could say are really bad. You don't have to be like, wow, the economy's good or the economy's bad. But that's how we talk about the markets. S&P 500, market's doing great. Is the market doing great? Based on S&P 500, all-time high, yes. But you better have exposure either to the entire S&P 500, hopefully you do 3 or 401k, or to 4 great stocks that have significantly outperformed over the past, month and 7 days of this year. And even last year with the Mag 7. You have Disney on deck to report. This is after the bell. I can tell you the fact that Iger already scheduled a CNBC interview after the close, that they're going to report very, very good results. The results are going to be good for several reasons. One is the analysts have lowered these numbers, which they've done for the past 10 quarters in a row, and Disney is able to beat. I think people see through that, but it's going to be an easy number to beat. It's 99 cents in earnings. They should be doing more easily $1.20 plus. Okay, so those estimates are really low, and it's amazing that they're low. They're that low when you look at Disney and Iger and the cost cutting is massive, and they had to. That flows directly to the bottom line when you cut costs. You're going to take a charge like we saw with Snap, which got wrecked, which I think is one of the biggest buying opportunities in the market right now. And if you look at the numbers, they reported a much bigger EBITDA loss. And they beat on every metric, just about every metric. And even going forward, the guidance was good. They beat on daily active users, but yet they took a very, very big loss because they put all their losses in the kitchen sink into next quarter, because that's what you have to do with severance packages and stuff like that, to the point where analysts, even JP Morgan, so they missed EBITDA. They reported like a $70 what was it, $70 million loss or something, and expecting like a $30 million loss. And that's the reason. That's the main reason why the stock came down. People talk about advertising revenues bad. It's not. If you look at the numbers, it's not. Now, if you look at EBITDA and you look at even JP Morgan, I read a lot of analyst reports, JP Morgan increased their EBITDA estimates by 80% to over, I think it's $450 million for the end of 2024. Okay, they just finished 2023. They're going to report Q1. That's where they took their losses. And everybody's like, this loss is an advertising platform. They're actually seeing growth. They're doing good, and they're going to cost even more, and they're buying back stocks. So to me, that's a clear overreaction. Of 30%? When these guys are like, let's just put it into next quarter, but the analysts are raising. When do you see a stock go down 30%, analysts raising their full year estimates? You never see that. So again, these disconnects, that's what I'm here for, to tell you about. When I look at Disney cutting costs, I mean, just from cost cutting and the fact that these numbers are easy to beat, I think it's $23.7 billion is the estimate. They're going to blow them away, for other reasons that I'm not going to mention. But, it is going to be interesting because I think the stock's probably going to go higher on this. And when I look under the hood, there's still a lot going on. I hate that they still say streaming is their main growth initiative when they can't compete with Netflix or anyone else because their best content doesn't come out on their platform first. They're even going to put the best content ever, which is Mandalorian, which is on their Disney Plus service. They're actually coming out with, they're putting that in the movies too. But that call should be interesting. I expect I'm going to talk about, the password sharing, and they're going into what Netflix did, which is a big deal. But their recent sports streaming partnership with Time Warner and Fox, which I think doesn't make a lot of sense, why the stocks aren't doing that good. Combine their services because Disney needs to do that because in order for them to break even on ESPN, on ESPN alone, which doesn't broadcast every sport, by the way, you're not getting access to all the games. They're going to have to charge over $50 a month for that. No one's going to do that for ESPN. It's not worth it. So now that you're bringing in Time Warner, who has, big sports franchise, Fox, you're going to bring even more sports, but they're going to have to charge $80 to $90 a month for this, and they're not going to get it. They're just not going to get it. But they're going to talk about that initiative as well. We'll break down the quarter with Disney tomorrow, but again, I'm going to tell you to short Disney here. We were very negative on Disney at 180, 170, 140. I mean, even negative to be fair at 140 when it went to 180, but then, we knew the numbers actually mattered. Doesn't matter how many people sign up if not paying anything. And let's see if they could turn it around and stop focusing on a freaking dividend. Jesus, nobody cares about your dividend. You get 5% for free. Stop worrying about the dividend and paying the dividend. Focus on growth. That's why people are going to buy your stock with Disney. It's for growth. Right now, you're cost cut. If you're buying Disney, you're buying a cost-cutting story. You're not buying a growth story. As much as Iger's going to say, hey, we're growing, things are good, it's not a growth story. Not to mention theaters. I mean, is this a secular decline? Are people just not going to go to theaters as much anymore? I mean, how do the Marvel franchises, how do they not do that good? That's something they need to address as well. So we'll talk about that tomorrow. But I'm expecting strong earnings and maybe a nice 5% plus increase in the stock. I'd be surprised if they bomb that quarter because I don't think Iger would schedule that call right after. And he scheduled it nice and early. Again, he knows the numbers coming out. And if you're going to be first to talk on CNBC at 4:05 when those numbers are released, you better make sure that they are good. Let's see if I'm right. So tomorrow, very, very big day, hosting a free live crypto event. It's our second in the Crypto 2024 series. So this one, I'm going to talk about the halving coming up in April for Bitcoin and why it should be called a super halving. And look, 2 months ago in our first series, I talked about the ETF approvals coming. They got approved, I think, a month later, and Bitcoin ran up tremendously after that, into that after our call. I said why it was a game changer. Said how Bitcoin is going to run up into that announcement, and you should expect, sell on news event. Bitcoin's going to come down. I think it hit 39,000. Now it's back up to 43. So hopefully you'll listen to it and you're a buyer. You're still going to have these ups and downs, ebbs and flows and stuff like that. But tomorrow, I'm going to highlight why if you're a big Bitcoin believer, which many of you are, and I have great contacts that are like, Frank, I buy Bitcoin and everything else is shit. And I get it. That's fine. But if you really, truly think Bitcoin's going a lot higher, which a lot of you, I think, listening to this believe, most of you, especially if you're in crypto, and I'm not talking about where's it going to go or when, how much, if you just think it's going to go higher 6 months from now, 9 months from now, 3 years from now, which again, you could make that case what the halving does. reduces supply growth. If you keep demand the same, prices are going to go higher, which is done every 4 years during these halvings. But if you're truly a believer in Bitcoin's going to go higher, I'm going to show you why it's not the best strategy just to buy Bitcoin and hold it. Because you're going to be missing out on gains that can change your life. Okay, and I'm not bullshitting you here when I say that. If you look at Bitcoin, I mean, surges after the past halvings. If you look at last halving, 2020, 18 months after, 600% gains in Bitcoin, which is amazing. In 18 months, holy cow. But if you strip that out, the rest of the crypto market went up 3 times that amount. Some of them going up tens of thousands of percent. And you say, okay, well, you're cherry picking a few names here. It's crazy. Listen, crypto is the only place I would argue that you can invest in great technologies, because what these altcoins are, and some of them are shitcoins, they're software companies. That's what they are. That's what altcoins are. But you can invest in these great technologies at the very, very early stages of growth. I mean, you could have bought Bitcoin for under $1 in 2011. Where can you buy an amazing, great growth company for under $1? You say, well, I'm on the pink sheet. It's garbage. It's shit. You can't. And most of the companies less than a few years old that are seeing exceptional growth are going to IPO at billion-dollar plus valuations. What we've seen, even Uber, good quarter, still well below its IPO price. So that with a lot of stocks, I mean, you go to almost any single SPAC and what they came out at. You look at Coinbase, which was up 300% last year. Unbelievable move, is still 45% below its IPO price. That's how high, that's how Wall Street fucks the average investor. They hyped this thing up. And by the way, you couldn't have found a better time to the day, to launch Coinbase when they launched it. I mean, I think it was right when Bitcoin was at all-time highs. It was perfect. But you can't do that. In crypto, you could do that. I'm not saying you're going to buy Bitcoin for $1, but you could have bought it for under $1,000 in 2014. Not that long ago, 10 years ago. That's a 43x on your investment, 10 years. And for perspective, Microsoft, largest company in the world, had just 10x gains over the same time frame. There's a big difference between 10x and 43x, guys. Huge, 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 huge difference. Both great, but which would you rather have? And putting $5,000 in Bitcoin at 100 would have generated over $2 million for you. Now, someone's been covering the markets for such a long time, for 3 decades. Trust me. It's rare. Even with NVIDIA buying it at 9-10 years ago, you would have saw 15x gains. And that is the perfect, best, greatest stock ever, buying it cheap when, again, nobody focused on AI. The chips were okay back then. Commoditized like the rest of the chip industry. But when you look at Bitcoin following the ETF approvals, and what does that mean? Right? Because now what happened, you're like, oh, okay, it's not a big deal, whatever. This is giving tens of millions of new people easy access to Bitcoin for the very first time. These people have 30 trillion in assets that are places like CalPERS, New York State, Florida State pension funds. The biggest pension funds with hundreds of billions in asset under management now have access to Bitcoin. And these people are going to be able to allocate, 1%, 2% of the retirement portfolio in Bitcoin, which they should. And institutions and Wall Street loves it because it's an asset that eventually, and it feels like it's not going to be as correlated with the market. And there's never an asset that's created like that. You try to get it with gold, it doesn't happen. You try to get it with other, think about it. When you see the market collapse, right? You don't have it. Bitcoin's totally different. Decentralized, no central bank. No bullshit, no printing money, fixed supply. Here it is. And that's a game changer, but not just for Bitcoin. It's for the entire industry. Because now the best projects are going to get funded. More innovation is going to take place, which our government hates. Jamie Dimon coming out against crypto. Elizabeth Warren coming out against crypto. Why? Because they control our banking industry, which is a boys' club that generated last quarter? The top 4, over $100 billion in revenue, $30 billion in profits for what? Being a middleman, for holding our money, charging fees galore. You say some things they may create, whatever, for the rich elite, whatever. But, the exotic products that they create, all this shit. And this is an industry that's never really been disrupted in the history of the internet. I'm not talking about having online banking. I'm talking about having lower fees on almost everything that we buy. That's what Amazon did. That's what you see across every single industry, going directly from the person who produced it to the consumer without all these minimum taken profits. That's not the banking industry. And the laws right now don't allow any bank to become big. That's why you're seeing the collapse in New York Community. You should be celebrated. When you have 50 million assets and you go to 100 million in assets, over 100 million in assets, you should be celebrating. Not 100 million, 100 billion in assets. You should be holy. There should never be any restrictions on how fast you can grow, other than your own restrictions, which, okay, I got to get my supply chain in order, stuff like that. There shouldn't be government restrictions on how fast any company should grow. And in banking, you have that. And that company did a great job, got assets from the government. I think it was from Signature when they went under, got some of their assets, 20, 25 billion, pushed them over that threshold, and now they got wrecked because they had to provide more of their money into, more capital to keep on the side, reserve ratios, which makes sense when you have trillions like the big guys do, but not for a bank like that, and they got wrecked. But here you have this amazing innovation and all this stuff taking place. Not all of them, but a lot of bullshit has been eliminated. But this is an area, guys, you have to have some allocation to. And I'm a prime example. It's worked for me. That amazing. And even through that terrible year and a half, which is horrible, before was unbelievable. And now you're seeing this really come back where this isn't a cyclical industry anymore. You're going to have this constant inflow of billions of dollars into Bitcoin. And it's not just Bitcoin. Now you're going to see the best projects get funded. These chains talking to each other, interoperability, play, and earned as you're playing video games. D-Pin, you'll find out what that means tomorrow. One of the biggest trends, when it relies on community. Why in the hell aren't some of these companies like Meta or Google that steal all of your personal information? Why aren't you getting fucking paid for that? Don't you think you should? I'm using a platform. They're stealing my information and selling it to third parties and making a fortune off of you. How about having a platform that, okay, you agreed to this, but you get paid a little bit if you do that? Makes sense to me. So you have these walled gardens and big companies, and again, they want to be centralized and closed, but this disrupts not just finance, but the biggest technology companies in the world. And this is fascinating now. Now that Bitcoin halving is coming, now the ETF approval, it's game changers in this industry, and you're going to see many, many of these names do great. So we're going to register for tomorrow's Crypto 2024 event. Again, it's for free. It starts at 7 p.m. It's going to be 100% live like it was last time. So feel free to ask as many questions you want or whatever. You can go to CurziocCrypto.com. That's the website. And when you register, you'll have access to ask me questions. And when we did this last time, I'm telling you, we had so many freaking great questions, which is awesome. And we get to see it beforehand. But last time I probably spent 45 minutes on the presentation. I spent an hour and 15 minutes. I only wanted to spend 15 minutes on Q&A. But there was so many people that stayed on, and it was just cool. We were just hanging out. It was Daniel and I going over these questions live. In tomorrow's event, I'm going to make it probably 15 minutes of some of the stuff, but more details of what I talked about, and then take a ton of your questions. So take advantage of it. It's for free. So it's really cool. If you register, CurziocCrypto.com for free, 7 p.m. But when you register, you're going to have access to ask us questions even before the event, and then, we'll put them in a queue and spend a lot of that time just chilling, hanging out, having a couple beers, Daniel and I, and answering your questions and talking about crypto. And this is also for people who aren't familiar with crypto or want to learn. Again, I'm not going to make it complicated. I'm going to dial it down, make it really easy for you to understand, but why you need a small percentage of speculative capital allocated to this sector. Don't sell out everything and go crazy. Don't get, you want that greed factor. Everybody should have it. But this is a sector that can provide returns that you can't see almost any place else, especially in the stock market now, as the best names IPO at crazy, crazy valuations. So CurziocCrypto.com, 7 p.m. tomorrow. Have some fun live. Should be pretty cool. And I'll see you guys then. I'll also provide a special offer for a crypto intelligence newsletter, which we do during these events, so you can expect that. We're not shoving it down your throat or anything, but I just recommended yesterday the issue came out, 5 new recommendations. So, I'm putting my money where my mouth is. I'm not just saying this. I don't think I've ever recommended 5 at one time since 4 years, I think, we're doing crypto intelligence. But more importantly, what we're doing now at Curzio Research, which I think is a game changer, and it's resulting in a lot of people subscribing to our products and becoming, part of our brand for a very long time, is anyone that comes in gets a 10-minute phone call with me. And it sounds crazy, right? And to me, it doesn't sound crazy. That's the way it should be, right? I want to talk to clients. That's how our network is built. That's how this podcast was built. There's so many people who are educated in, so many different fields that help me out tremendously and stay ahead of the markets. And I got to tell you, there's great people that I talk to. They're really cool. And, they're like, oh, I'm honored to talk to them. I mean, you're a client of mine. That should be the beginning of the relationship. That's how Lululemon, going door to door to build one of the best apparel brands in the world. And people tell them to know. So for me, I see that in our industry. Where else are you going to find that? You're not going to see that. But for us, you see that. And that's important. So it's not like this sale and you're like, oh, shit, what did I just do? No, you're going to get to talk to me, answer questions, be there for you, help you out. And that's what we're going to do with all these products going forward where, hey, I don't mind getting on a 10-minute phone call, and it's not limited to 10 minutes. I'm like, get the hell off. Sometimes I go a little bit, just one guy I just recently talked to is in Hawaii. He's in the Air Force, flies jets. Great guy. I've followed me for a long time, as UEC is one of his biggest holdings, and followed me for 10 years. I mean, that's awesome, man. That's freaking awesome talking to people like that. It's just great. So that's going to be part of the call too. Again, you're not required, but you're going to get some really, really great ideas that I researched to death over the past couple weeks, and recommending 5 of them that should benefit tremendously much, much more from Bitcoin, as a halving is going to take place in April. And then I think it's going to, not just Bitcoin is going to go higher, but you're going to see a lot of these names do very, very well. So tomorrow's event should be pretty cool, 7 p.m. Hope to see you there. CurzioCrypto.com. So it's it for me. Dan and I are going to be break down the latest round of earnings in more detail, coming up with our pick as well. That's going to be tomorrow's Wall Street Unplugged Premium. Also, tomorrow, big day, I'm going to be sharing my Super Bowl pick, which is always the guaranteed bet of your life, because all you have to do is the opposite of what I do. I was 1-1 for the championships, but I'm going to break it down. I follow football a lot. I'm going to come up with great analysis that makes a lot of sense, and then I usually lose that bet. And the last time I won that bet, I'm pretty sure the last time I won, because I lost last year, was the last time these two teams played in the Super Bowl. And San Francisco was winning big, and then Mahomes went crazy, but at Kansas City. I think it was the last time I won. I think I won maybe 2-3 times out of the past 13, 14 years I've been doing this. So it's really important for you guys. I usually have great prop bets, which usually do okay, but the actual pick is usually horrible for some reason. I have a bad track record and have fun with it. I'm going to break down the game tomorrow. So that should be pretty fun in Wall Street Unplugged. So guys, questions, comments, I'm here for you. Email me, frank@curzioresearch.com. That's frank@curzioresearch.com. And I'll see you guys tomorrow. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today, and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.